Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Attila Pink, and in today's video, I'm going to talk about that is the bank sector in problem because, yeah, there is trouble in the air. The second thing I would like to talk about is all about that basically USDC and the DAI is now back to its peg $1, but some crazy things happened on the weekend. We should definitely talk about that. And tomorrow, the new CPI data is coming out, and this is another thing which can move the market. So a lot of things happening. Guys, let's hit it. And don't forget that every day I'm making you a couple of fresh videos here on this channel. So simply subscribe if you'd like to don't miss any single important information. I'm making short videos, longer videos, 2-3 of them. So I really keep you up to date. And if you like this kind of content, then simply hit the like button and don't forget the subscribe button, bell button, and all. That's the order we should do it if you don't want to miss any information. Right, and now let's move on to the market, where we can see that actually Bitcoin is now up more than 7%, almost 8% right now in the last 24 hours. Ethereum just doing the same, about 8% up. Ethereum 1,580, while Bitcoin is 22,103 $. Okay, and when we're looking at the winners, Conflux up 32%. Synthetics also 32, Maker 28. We can see some gainers here for sure, and yeah, basically not too many losers, no losers to be honest with you. And when we're looking at here the candlestick chart, we can see that Bitcoin actually fired up, started yesterday after the announcement. Then the government announced that they're going to, the Fed announced that they're going to save the depositors with a 25 billion US dollar found, but I'm going to talk about this. After that, prices went up. Basically, we went all the way up to this 22,000. What's that? Yeah, 800ish. What was it candle? Let me go on it. The high was 22,800. It's a bit far from me. Yeah, okay, about that. But yeah, then we were pushed back, and yeah, right now we are here. It was a nice move. So basically, where we collapsed and went down all the way here to 19,000, couple of hundred. We all the way went back here, but now we can go here for sideways. Tomorrow it's an important day, but I'm going to talk about that as well. So anyway, let's move on to the first topic, and the first topic is that are the banks actually in trouble right now? Let's talk about it. Actually, it's crazy what happened, but it's not something but we thought that it could never happen in this financial situation. So basically, I don't even know where to start, to be honest with you. But okay, let's start from here. So on the 10th of March, we had Silicon Valley Bank shut down by California regulators. And to be honest with you, there is this FDIC insure up $250,000 US per depositor, per institution, and per ownership category. But this could be a lot of money for some individual, but for a company, this is nothing. So of course there was a panic starting, and we could see that this is over the weekend. This is also crazy. That over the weekend, the panic started, and now the Monday, it's critical what's happening today. Will people go to banks, and take out their money? And obviously, the authorities, the Fed and the Treasury realized this, and they had an emergency meeting, and they came out basically that, where is it? Yeah. So first we have here, Secretary Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. Depositors will have access to all of their money starting Monday, today or the 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by taxpayers. And this is here that the Treasury Secretary, the Department of the Treasury, will make available up to a 25 billion US dollar from the Exchange Stabilization Fund as a backstop for the BTFP. So the Federal Reserve does not anticipate that it will be necessary to draw on these backstop funds. So right now, they made money available. All depositors should be fine. However, we do know that the problem is that basically if you are a depositor in the bank, you walk into the bank, you give your money to them. What do they do with the money? They, first of all, give it out to others. So they lend it out, those who take credit, and or they're buying treasury bond, right? And because treasury bonds are supposed to be quite safe, and they bought a treasury bond, for example, for a 10-year period a year ago with a 0 or 1.5% interest. That's pretty good. However, the Fed has now increased interest rates, with 4.5% plus. And well, the problem is now that those bonds value is less than it was before, because don't forget, if the interest rates go up, the bonds value going down. But now people and startups and so on and so forth, in case of Silicon Valley Bank, for instance, they simply want their money because they want to take out, they would like to fix any things, things what they're in trouble now, but doesn't matter, they need money. When they take out money, basically the bank has to sell their investment, their bonds, but with a loss. And this is what happened. And this is what they announced. And then others started to run to the bank and take out the money. Why? Because bank doesn't really keep its cash, so it always can give it back people straight away. They invest that money to make more. And therefore, a bank run could be actually very dangerous. And this will happen. It's a serious thing, to be honest with you. And they realized it. Therefore, now they took this from the Exchange Stabilization Fund, this 25 billion US dollar. But bottom line is, if they need money again, they will go back to the printer, because what is the Fed doing now? They increasing interest rates, and this can stop if the inflation has reached the level they wanted to push it down, so 2%. B, they break something, and they broke the system right now, it looks like. Therefore, there is very, very interesting news now out how they will continue. And actually, what's happening right now in the market, it's definitely a mess. And, important things, meetings coming up and data is coming out. I'm going to talk about it in a second. But maybe the small banks can be in the trouble, because everybody would like to go to a bigger bank where their deposits are much safer, or take it out. And we don't know what exactly going to happen the next couple of days, so we have to keep an eye on it, and we will see how the market and the people will react to this. Okay, so that's serious stuff what happened. And because of this, what happened to Silicon Valley Bank, USDC's peg and DAI's peg also went down, so it's depegged basically from $1, and that caused some problem in crypto during the weekend. So we had USDC and DAI depegging, and that was kind of scary, to be honest with you, because what happened? First of all, it came out that Circle, which is the company behind the USDC, had part of its backups for the USDC in Silicon Valley Bank. And when the bank was shut down, then the question was how they get it. And immediately their peg started to go down. And look at how it looks like. So USDC, it went all the way down to 0.87 cent, dollar, so 87 cent altogether. And another stable coin, DAI, also witnessed the same problem. Pretty much the same. It went down, which is supposed to be, more decentralized. But the problem with DAI is that it was pegged to Ethereum, but then it had its own problem when Ethereum back then in the past lost a lot of percentages, and it was a pretty bad collateral for DAI because of this. Therefore, they moved to USDC, so they will be backed by USDC. But if USDC losing its peg, what happened to DAI losing the peg again? So whatever stablecoins are not looking safe at the moment. We just do not know what's happening to Tether, because Tether looks totally fine in this situation. Maybe because there's the quick question, what is behind Tether? But here with USDC, we can clearly see what funds and where do they have. And if it's in the bank, which is now shut down, and it's a question when they will get it, it has an impact on its token USDC, and because of this, what I've just explained, DAI. So guys, in stablecoins right now, this is definitely a risky game, and it could hit the DeFi industry much stronger. But luckily, because now this announcement, this 25 billion US dollar, it could go back to its peg. As you can see right now, it looks quite okay, both of them. But it was dangerous, and it's a kind of wake-up call. What's happening here in centralized system, and this is one of the reasons why we should understand crypto. We should think about in Bitcoin terms, because because it's clear that this fiat system is broken. And what's now? Money printing again, and this will inflate the whole thing and more. So things really do not look pretty right now, and we should really understand that. Okay, and now let's talk about tomorrow, because tomorrow an important data is coming out. Okay, so tomorrow we have the CPI data coming out, the February CPI. Here we go. And the forecast is actually 6%. And the question is, can we meet this forecast? Because last time the forecast was 6.2, and it turned out it's 6.4 was the actual one. And well, that didn't work out that well. So now the question is, are we meeting this 6%? We do know that they calculate now things differently than before, which could be in favor for the CPI data, which doesn't mean that the inflation is much better. It's just a calculation anyway. So if new good data is coming out, which means it's 6 or even better, then we can see again probably an increase, if nothing else happening in the market. When it's going to be again worse than the forecast, well, this could be pretty bad for the market, and it can go down again. So big question tomorrow, and it's Eastern time, 8:30 a.m. So we should definitely keep an eye on this. And now, of course, there's a question: what will happening on the FOMC meeting? What will be the rate hike for the Fed this time? Because if you remember, originally we had this goal for 25 basis points, and then because the recent bad inflation data and other things came out, the possibility shifted after Jerome Powell talked from 25 to 50. But now, what can stop the Fed increasing interest rates? Two things: A, the inflation, it's met what they wanted, like 2%, or they're breaking something, as I mentioned before. That means now they broke the system, to be honest with you, and the bank sector is looking pretty bad at the moment, and we don't know the consequences totally yet. Therefore, actually, it can happen, and this is what actually here Goldman Sachs is saying, that no longer expects the Fed to hike rates in March. Side stress on banking system, because if they do so, then they can even break it more. So now we backed from 50, which went over 50 based on probably the possibility it will be rather 25, or some experts saying there will be none. And this would be, again, an interesting change in this game. So you really don't know what's going to happen. This will be on the 22nd of March. So these two datas, the 14th tomorrow and the 22nd, both will be important. And what else is going to happen? Well, a lot of hot things happening in the news. On this channel, I keep you up to date with short videos. These are like the quickies, and with these longer videos between Monday and Friday. So on weekdays, definitely hit the like button if you like this kind of content, and also subscribe to this YouTube channel if you would like to keep yourself up to date, because then you're getting the notifications. If you do this in the order, subscribe, bell button, all, and then you will get the notifications. Guys, I wish you an amazing day. Have a good one. See you tomorrow. Bye-bye.